Dipan Mehta, member with Bombay Stock Exchange. He also represents NSE. He joined us live with for a quick check on market fundamentals. Dipan, good afternoon to you. Thank you for joining us. Markets are consolidating. Do you think in the run-up to the event, which is still 2 days away, we will see more consolidation, some downside as markets are now running out of steam?
Well, we are in volatile times, so it's difficult to predict the short-term movement. But one assessment is clear that the markets have discounted an NDA victory, NDA majority, but have not discounted BJP majority. So if BJP by themselves also get beyond 270 or thereabout, then you could see the markets moving up further from these levels. At the same time, if the NDA ends up getting, say, less than 260, about 250 seats or so, then you would see definitely a correction from these levels. That's the simple equation, which is quite apparent from what we have seen over the past 4-5 trading sessions, and the news flow which has come through as far as exit polls is concerned.
Dipan, the point is, what happens after that once the market is done pricing in, assuming that it is an NDA victory and a significant one at that? Do you see significant price correction as well thereby and immediately post the event on May 16th?
Yeah, I think if the results are more or less in line with what the exit polls have predicted, then you could see that sell-on news syndrome taking over the market and you could see a mild correction. But I think, the way the investors are moving at this point of time, clearly it's a buy on decline strategy a lot of them are following. So I wouldn't bet on a significant correction. At the same time, I think news flow even after the election results are out will be thick and fast, because then you'll have the cabinet formation, and then once that has been done, then the Prime Minister and all the ministers also will come out with their statements and plans for what they have for their ministries. And then again, I think, the expectations will start building upon the budget and what the government can achieve in the short term. So it's going to be exciting times even after the elections. And I think various sectors, companies will move depending upon what the priority areas are for the new government and the ministers, how dynamic they are, what their track record is, what difference they can make to the respective ministries. Those aspects also, positive nonetheless, will start getting factored into our markets. And then we'll have the earnings season winding down also by 31st May. So the balanced results would come through, but that could be a bit of a dampener because the worst results usually come towards the end. So I would say that, the kind of busy season doesn't end with Friday. It continues, I think, all the way till the end of the May. And then I think we'll get into the monsoon. So, we're in for quite exciting times and a lot of market moving developments.
Dipan, just a polite reminder for our viewers that markets have been wrong in judging the election cycle and the economic cycle. 2004, markets thought that India would fall apart. Market came down. What preceded was a big economic boom, a big bull market which we've never seen in our life. Similarly, 2009 markets thought India would be on a different threshold given what kind of election verdict we got. What we got after 2009 election was a period of big economic lull. Why are markets so confident that the NDA victory will do the trick for us?
See, even after May 2009, we had that circuit up closing. And then market moved sideways, and then eventually, I think a year or so down the line, the markets did pick up. We had the Sensex Nifty also rallying at highs even after May 2009. It's just when the disappointment started setting in about the way the government was functioning, all the various corruption scams which came through, and the sort of problems which were there in the overseas market, and again, the stagflation kind of a situation which we got ourselves into, the attacks on the rupee. All these things kind of, caused the correction in the markets thereafter. So I think for a year or two at least after the NDA comes to power, the markets, should trade on firm ground on the hope and expectation that change will take place. In any case, I think, typically 6-month period is always the honeymoon period for a new government. And I don't see that, that honeymoon period not being run by the market to the new government. And as regards, trading on opinion polls, yes, a lot of doubts are there, and markets presently are assuming the opinion polls to be completely accurate and correct. and they have been notoriously inaccurate as well. But then, well, that's something, which is part and parcel of when you trade such a major event. And all that one can say is that we can only hope that the pollsters have got more intelligent, more sensible, and have learnt a little bit more from all the mistakes that have been made in the past.
Dipan, so what's the right sectoral approach from now, say, up until when the budget is declared, 45 odd days from the new government formation? Do you think this tilt towards cyclicals would stay, or do you think IT and pharma, the defensive pack, would make a comeback?
See, I think the sectors everybody knows, and me and several other analysts have been saying that you should get out of the export-oriented into the consumer-oriented. So my only, additional insight is that that entire process should be gradual, not to, make huge large-scale switches out of the export-oriented into the domestic-oriented. Better way would be to put incremental, savings into equities which are benefiting from improved domestic trends. So rather than selling off your defensives in the export-oriented sectors, put additional money in the domestic-oriented sectors. Having said that, I think, medium to long-term prospects for pharma, IT are also not bad. And from time to time, they do act as a hedge because, the way the structure of the economy is, way the global markets are, one should not assume that there can be no further attacks and there can be no further, panic situations where again the rupee could, go for a toss. So in a way, I think, it's important to maintain the balance in the portfolio. And clearly, the focus has to be now on mid-cap companies which have, been underperforming for past 4-5 years because of balance sheet issues or because of absence of business coming through from the government or from the industry because of a very poor capex cycle. And then, some of the consumer-oriented, second-line consumer-oriented companies which are still available at attractive valuations on the hope that at least urban consumption will pick up, although there could be problems on the rural consumption side because of maybe a poor monsoon.
Okay, Dipan, good chatting with you. Appreciate you taking the time out and speaking with us today.